Okay, recording this video on Monday the 19th of June 2017. Do hope you are doing well. It's just gone 3 p.m. here in Sydney on Monday afternoon, just gone midnight on Sunday evening, Chicago time. I think yesterday was Father's Day in the US and the UK. So to all the dads out there, I do hope you had a great Father's Day, and I hope everybody made a real fuss over you. For whatever reason, we don't celebrate Father's Day in June. I think it's in September here in Australia. Heaven knows why it is different kind of all around the world, particularly in different English-speaking countries, but you know, that's what it is. So anyway, happy Father's Day to everybody who celebrated it. So a couple of days ago, I got it was just a little email. It shouldn't have hurt me, but it did. This guy, I deleted the email, don't even know who it was from now, but he said, "Don't understand a word you're talking about." That was it. That was all it was. Silly me, I emailed back. Shouldn't have bothered. But they emailed back and said they didn't understand what I was talking about. And they thought that a lot of people don't understand what the hell I'm talking about, which is probably true. And I apologize if you don't understand what I'm talking about. You kind of get into your own indicators and method of trading, and I think you get a little bit kind of self-absorbed, and everything seems so obvious and normal that people coming from totally different disciplines look at my stuff and probably think, what the hell is going on? So we had a picture-perfect reversal trade on Friday, and I'm going to walk you through it, taking it as slow as I can to explain what I see on my charts and why my charts are different from a lot of charts that you'll see around the place. So first thing to say, this is a 500 tick bar chart. I use tick bar charts because they allow me to calculate the average trade size on a bar-by-bar basis. You put on a volume indicator on a tick bar chart, and it'll show you, instead of the total volume, it'll show you the average tick size that's going through trade by trade. That is really important information because it allows you to be able to identify professionals and amateurs by looking at large and small average trade size. So that's number one. The second thing it does is it smooths out a lot of the overnight activity, so that if I just flip between this is my system view, and my kind of traditional view here, this is the overnight activity. This is the day session with the 11 a.m. window here. And you can see all of those hours during the overnight session get compressed because there are hardly any trades going through on the E-mini overnight. But during the day session, there's lots of trades kind of going through. If you're using cycle analysis, which is one of my kind of primary components of my trading, if you had this based on time, you'd see lots of kind of spurious cycles going on during that overnight activity with this kind of stretched out, even larger than the time frame that we see from start to close here of the day session. So tick bar charts are helpful from those two respects, calculating average trade size and also compressing that overnight activity so that it doesn't kind of mess up your cycle kind of calculation. So that's the first thing to say, 500 tick bar chart. The 5-step setup that I talk about has these kind of components, and the first component of which is exhaustion sell. Exhaustion sell or exhaustion buy for reversals. Volume will always signal first. We always get extremes of volume before the market changes direction. So for example, here we have exhaustion buy patterns, and let me flick to the momentum chart. So down below here, this is volume momentum, and it's calculating the net of bids and ask, volume traded at bid and the ask, the net of that, and then calculating these kind of extreme values here and here. These are extreme values, more extreme values kind of down here. Volume exhaustion will always signal first. That's your first signal that then there is a change in trend happening. So for this change into a downtrend, we needed exhaustion buying for all the buyers to buy, and then we have a divergence pattern here showing less buying going on as we're making new highs there. At the bottom of this range, down here on this left shoulder, we have exhaustion sell, and there's the exhaustion sell signal on the volume, followed by bullish divergence in volume, and then what I call flush patterns here. So we have more and more selling going on, but it's not as extreme as the exhaustion signal, and it's clearing out sellers at these points. These are people that are jumping in, trying to sell at new lows kind of down here, and eventually they'll get it wrong. They'll get taken out when the market reverses and go the other way. But I talk about the volume being flushed out here, and those last of those sellers are being flushed out. Sometimes you get them on reversals, like here, from the bottom of this range, and then we reverse into an uptrend, and sometimes you don't. At the top here we didn't have flush signals overnight, so sometimes they kind of pop up, sometimes there's just one. In this case we actually got three. But the first thing you'll see on a reversal is that we have exhaustion volume signals, either exhaustion buy going from a high to a low, and then exhaustion sell going from a low to a high. So that's the first thing I'm looking at. So step one in my 5-step setup is the volume signals that I see on the volume momentum going on. The second thing that you'll see is price making an extreme, and you'll see end of trend signals kind of rippling through. Better sine wave is based on an algorithm that John Eller's designed that calculates the cyclical energy in a price stream. The guy is a genius, and he moved a traditional mathematical technique, which was called a Hilbert transform, used that technique to calculate cyclical energy in a stream of price data in order to extract out that cyclical activity. The beauty of that, it allows you to calculate an indicator, better sine wave, that gives you both cycles and trends, because we go through phases where we're in a cyclical mode, and you can see in this phase here we're batting backwards and forwards. You can see all of these resistance and support levels on a couple of different time frames. We're batting backwards and forwards, and then we break out of this cyclical pattern into trends. So up here we've got a whole bunch of little cyclical kind of patterns. We're batting backwards and forwards in between those, and then we break out of the support into a trend move kind of down here. So the beauty of better sine wave is it's got these cyclical components that break into trending components, and what you're trying to do is to catch a trend move. So we're moving out of a cyclical range into a trending range, moving out of a cyclical range into a trending range, and then here we're moving out of another kind of cyclical congestion pattern here into a trending range, and so on. So better sine wave kind of allows you to look at those support and resistance. Once we've broken down and we're breaking these supports, we're in a downtrend. Once we're breaking resistance lines, we're in an uptrend, and that's what these lines kind of show you beneath the price bars here. So the lowest line here is showing at level 1 is the lowest time frame. Level 2 at this level here is breaks below and above cyclical resistance in the intermediate time frame, and then I calculate a combo of those lowest and intermediate time frame. I do not use the highest time frame, because the highest time frame is, if you like, where we're going to reach, where we're going to go towards. So the highest time frame for me is the target. Once we got a cyclical resistance on the highest time frame, and that's these really solid lines here, that for me is a signal that I should be looking for the next change in trend down into a downtrend. Once we see cyclical support kind of coming in here in this highest time frame, I ought to be looking for trend breaks on the way up. This one here that we set off during the latter part of Friday's activity, highest time frame, resistance going on here. We batted backwards and forwards through it for a while. We tried to have a little bit of weakness here, but it didn't give. It didn't break into a trend move like this, partly because we hadn't had exhaustion buying. This exhaustion buying meant we'd run out of buyers at that point. Through all of this activity here, we had not seen any exhaustion buying activity. So we hadn't run out of buyers who were then needing to change position when we start to break into a downtrend. So this continued to break up through resistance into a higher trend move that will have another support and resistance on this high time frame kind of going forward. So the second sign that we've got a change in trend going on is that we see end of trend signals and cyclical activity all kind of lining up together. So we have little end of trends here on the lowest time frame. That's that little signal there and there. Then we have a pullback to end of trend signal on the intermediate time frame there. This is all happening within support on the highest time frame, and so all of that activity, the end of those trending moves into more cyclical activity, is showing me that we're starting to stop this downtrend, and at some point this market is going to catch and hold and will reverse and go the other way. So that's step number 2. Look for end of trends and the more cyclical activity that then breaks into another trending activity, trending move. Step number 3 in the 5-step setup is the first sign of strength. On the way down here, the first sign of weakness was we started breaking supports at this point, and that's what these white dots kind of show us going on here. We're breaking supports on the way down. For this change in trend on the way up, we start breaking resistance lines on the way up. So we have a break above a low time frame here, and then the intermediate and the low time frame together. So on downtrends, supports are broken. On uptrends, resistance lines are broken. And so that's how we have a downtrending move and an uptrending move. And as soon as these two time frames are breaking together, that signals what I call a confirmed uptrend or downtrend. So we've got two time frames breaking together, and that shows this line, little white line showing that's a confirmed downtrend at that point. Then as soon as we start breaking the two time frames together, we know the trending move to the upside is strong because we're breaking all those resistances, and we get confirmed uptrend, and that's what this line is showing me there. So there's a few things going on with this indicator down below. It's showing the breaks of support and resistance on two time frames and the combination of those two. It's also showing me where the end of trend signals are happening, and these are these little dots happening down here, big dots for the large end of trends, and then the combined confirmed uptrend and downtrend going on here and here. So that's step number 3. Exhaustion sell is number 1. End of trends and cyclical activity is number 2. Number 3 is the first sign of strength, which is the first break that we get. And then what I'm looking for is after we have that first pulse of breaking a resistance, that's the first sign of strength, we always have a little bit of a pullback. And we pull back to an area that I call a low-risk entry point. And it's the first cyclical turn after we have that break. And that's what that signal is there, that red dot just after the change in trend into strength. That's our low-risk entry point. And that, if you got the nerve to jump in at that point, of course that was almost the low of the day, was a perfect entry. I actually stepped in a little bit later than that at 22.75, so that was just about here. As this break was happening here. I'll tag on the day trade, but the low risk entry point is an area, as soon as I'm seeing that pop up, I'm waiting for confirmation that that holds, that level of support holds at that point, and then we start breaking resistances as well. So as soon as that comes up and then it's followed up with more breaks in that direction, I know that that was a good low risk entry point and I should be in looking for a long trade here. On the way down, it was a low risk entry point happening here at this point there. So we have our initial break, we have a little bit of a pushback, the low risk entry point kind of pops up, and then as soon as we start breaking the supports again and again, as we have here, we know we're kind of confirmed in a downtrend. So number 3 is the first sign of strength. Number 4 is the low risk entry point that comes in here, and then as soon as we're breaking through resistance on the way up, we've got a confirmed uptrend going on here, and that's number 5 kind of going on. The one thing I've not talked about is average trade size in the professionals and amateurs. And if you kind of flick to the other view of this, you can see that we had not a classic kind of pattern down here, but we do definitely have blue professional bars coming in at the lows down here. This little test down at this point here is amateur down bars, so the amateur's kind of going short here at this point. On this left shoulder over here where we had exhaustion sell, that was amateurs. When you have Rambo patterns at extremes with exhaustion sell, that is unstable. So the amateurs were getting short right on that extreme there. They maybe made a couple of points kind of in that general direction, but then they got taken out as soon as the trend reversed and we started to go the other way, and you can see a little Rambo pattern there. I call that a Rambo to Rambo channel, where they were going short on the extreme of that channel. They maybe thought it was kind of all good because they were breaking to new lows here, but then as soon as it reversed and went above where their stop would have been sitting, which is kind of typically 2.5 points away from where they were getting in at that point there, they're stopped out of their positions, and that's why we'll see a Rambo to Rambo channel where they're wrong at this point and then they're taken out on their stop at the other side kind of here. then the market kind of goes. There wasn't on that particular day a classic kind of blue professional, large blue professional bars kind of down here at the lows, a whole series of them going on there. So it's not Better Pro-Am was not kind of the perfect indicator, in combination with the price activity going on here. But the other thing to note is the 11 a.m. window. I'm always looking for reversals on reversal days to happen well before the 11 a.m. window. 11 a.m. window is important because that's when the European markets are starting to shut, the London and the German kind of French markets kind of shutting in Europe, and that happens about 11 a.m. Chicago time. A lot of the FX markets kind of go quiet after that because they're to a large extent kind of more driven out of the London markets than the US markets in terms of Forex. Obviously, the US stock market kind of keeps going, but after 11 a.m. there's less influence by what's happening overseas, and particularly in the European markets. And so I always think of this as kind of clear sailing from a US perspective. Any news events or whatever are not going to be influencing the US market from then on. And so that's why the 11 a.m. window is actually kind of important. So the market reversed nicely before 11 a.m. It was strong before then. So that means that there are typically no more than 2 trending moves in a day, and we had a downtrend move. We'd broken into an uptrend move, and this was likely to continue for the rest of the day because 2 trending moves in a day. It was unlikely to reverse at all of these end of trends and kind of continue to go down. As I said before, we'd not had exhaustion buy kind of up here, exhausted our buyers in order to kind of reverse and go the other way. So all we were going to do is kind of going to break to new highs, just push a little bit higher and higher by the end of the day. 1, 2 trending moves maximum per day. So there we go. That's Friday's kind of reversal trade in a little bit of detail. We're continuing to new highs. You can see the strength in the market. These red kind of bars here just showing what the combo trend line is showing at this point here. We had a little bit of weakness kind of pre the close on Friday, but overnight after the close on Friday into Sunday and into early Monday's kind of activity, we're still kind of breaking to new highs kind of going on here. This is kind of picture perfect. A lot of good things about this kind of reversal trade, this downtrend move into a break into an uptrend. So hopefully just going back to some basic principles and just explaining my indicators in a little bit more detail, that's kind of shown you what I was seeing on my charts on Friday. I'll tag on my day trade so you can see what I was actually thinking during this activity. I jumped in a little bit too early here for this kind of break, confirmed break, but it still kind of worked out well. I was out at the first end of trend up here, long at 22.75 and then out at 27.75 for a nice little 5-point move there. Obviously it went kind of higher, but I was done for the day, having done too much trading during Friday. Anyway, I hope you're doing well and looking forward to Monday's trade. Okay, just got long 22.75, long 22.75. Just checking the stops and targets. And maybe just jumping in a fraction early. I thought we were just going to cruise up through that resistance on 500. What a down day, just whacked this morning. And what are we coming up to? 10:05 a.m. Yeah, I need 22.75 to be taken out. Here we go. Open of the day, just whacked. But we've come into cyclical support in the highest time frame. We've got an exhaustion sell on the left shoulder, bullish divergence, flush, flush, flush. And we've had some strength and low risk entry point kind of down here. Confirmation of that will be a break back above another resistance, which is just sitting there at 22.75. That's why I was jumping in, because I thought that was going to happen. So, support, support, support. All around here. Break back above there before 11 a.m. with signal reversal day. Here it is in the bigger picture. With yesterday's low. Here, exhaustion sell. We come back into this kind of zone around here. So it's an area that they're willing to pick it up. Bullish divergence comes in on this time frame at least. So it's an area that we might see a reversal. But this has to go. That has to break above 22.75. Get this thing going. A nice jumping the creep blue professional bar through there would be good. Jesus, that was a bit hairy. Pretty nasty push down, but we immediately bounced from it, so that's kind of good. So that's actually not going to trigger a second break, just because we put in that support. Never mind. It's done the trick. It's kind of got us above that area. It's like a right shoulder here. So need to get nice continuation, not led by the amateurs. We need the blue professional bars to just go bang, 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 kind of break this thing up and away out of this area. Alright, well, we're going higher, 24 even hit. It's all kind of amateur up bar stuff. See that there on the 4500. It's kind of interesting. At some point we will have resistance coming on the 500 and the 1500. And then the break above that will give us the second break above this time frame, but all that strength kind of come in down here. So it's all good. 2675 is where the target's sitting, so what is that? It's actually just above here. What is that point there? 2650. So it's around a kind of a stop run kind of area. Might push it out a little. Let's see, what we're going for is the exhaustion buy on the reverse side. This exhaustion sell is a short covering rally. So anyway, let's keep holding, see where we go. Alright, here we go. We've got two resistances now that have come in, and this is when we need the blue professional bars. All this amateur bar stuff, we need a blue professional bar to come in. Give me kind of confidence to actually buying this move. And then take us back up through resistance at 24s and break us into a confirmed uptrend. Alright, I'm just going to move my target out to 27.75. And the reason for doing that, because this little area here is 2650 high. So a little area of stops probably sitting there that we could get into. Anyway, so little cluster, small one, blue professional bars underneath resistance. That's a little gathering, not a classic, but nice little pattern. Now we've broken resistance on 2 time frames. We're going up to make this support to resistance move. So there we go, double break, confirmed uptrend. Kind of Rambo pattern led there. Not a heck of a lot of blue professional bars on this MTF chart, but that's okay. Doesn't give me a great deal of confidence it's a real change in trend. It could be just waiting to go see an exhaustion short covering rally, then they'll come back in and push it down again. Don't know. So that's overthinking it. But anyway, so we're up at 25, 26 has got hit, so 26.75 was the initial target. Well, we got to 26.50, which was exactly these two highs here, and we just stopped dead in our tracks. No blue professional bars on these 2 time frames, which would be significant. But at some point this will come in resistance on the 4500. It's also coming up to 10 minutes to 11 AM, 11 AM window shutting. European markets kind of shutting. At some point this will come around, go pull back end of trend, and initial target's 26.75, which is just sitting up here, but I've moved it out 27.75. I still think it's right, given that we haven't seen a blue professional bar even on 1500. So maybe we'll go do that, pull back end of trend, sync up with this, with a blue professional bar on 1500, maybe one on 45. This is what I hate when trending moves just lose momentum and just kind of sit around. I'm always anxious just to take what I got rather than kind of hold out for the right target. So let's see. Alright, 675 initial target just got hit, and we've got a blue professional up bar on 1500. We're going pullback end of trend. Got my target sitting 27.75. It's 2 minutes to 11. Could we get a little bit of fireworks? Could we get a little bit of a stop run? It should be happening here. If we hit maybe 27s, that could trigger it. Bingo, just taken out 27.75. Excellent. That was for 5. Just happened around that end of trend. Nice one. Alright, and on the button of 11 AM. Looks like it's going to travel a little bit. But at some point this resistance will come in anyway. That was slow towards the end, but anyway, finally got it. So done for the day.